So it's not just about returns, but also the impact it's going to have in the society. In terms of the volatility, so it's going to be individual companies. So that's why in private credit is more bilateral. So we have to look at the company, look at their cash flow program. So I did mention the plastic company that export, you understand? Yeah. We have to look at their cash cycle. So how much power does Walmart or Tesco have in terms of payment vis-a-vis the impact on this company, and we start to put whether we put some flexibility in terms of their repayment or put some accordion feature that will help the company do what they need to do. So that's the difference between us and the bank in terms of it's not based on a straitjacket approach, it's based on individual company. I did mention that we have an agreement with McKinsey and Manufacturing Africa. They are doing a fantastic job. So they are even going into these companies and they are dressing them up for us. So they will have done a lot of things. So we get some transactions from them whereby they've already cleaned it up for us, and that is easy for us to take through our system. The other ones, we also can go in there and just dress it up and make sure that we clean up. So myself, like I said, I've been around investment banking for 24 years. So we know what we need to do to advise the company. We can even tell them, you are good, but you are not ripe for funding now. You need to do X, Y, Z. You need to put some equity. Another thing that we have put in our funding structure, we won't lend to you if you don't have corporate governance. We want to imbibe the spirit of corporate governance from SME. So what do I mean? So you own your company 100%. We are not saying sell anybody shares, but we must see that you are not the maker and shaker of the company. So they have to be an independent kind of board, because if you develop your company based on that, it will help you to stabilize. So you are not just waking up in the morning and making decisions. So if you don't have it, one of the impacts that we are creating in society is that we have an extensive list of Nigerians who can work with you, who will say, okay, we want you to work with this guy. Most of them pro bono, to make sure that this is your company. You have like a 4-man board. You are just number one out of the 4. And they can look at it very well, advise you, and make the company stable. Because if you look at one of the reasons why some of these SMEs never go beyond where they are is corporate governance. So they confuse revenue and profit. That's number one. And they make decisions just at will. So no matter how the company is good, you want it to stabilize. So not only are we going to help them look at how their financials should be, we also help them in the area of corporate governance to make sure that they are stable. And in terms of the pricing, so the pricing you are seeing there is the pricing for the investors. So 10 years plus 300 basis points. That's the yield to the investor. That's not the lending price. That's our cost. That's our cost. So the lending price depends on your risk rating. So we've signed up with S&P Global. So Nigeria on S&P number is about 6 plus. So we don't expect any company in Nigeria to be above 6 or 6 plus. So they will always be like 6 minus and probably 7 plus. So depending on where you rank in those things. So if you are like 8, for instance, we will not be able to touch you because that's too risky for us. So it depends on your inch on that, whether you are 6 plus, 6 minus, that would be the additional spread that would be on top of our borrowing cost. Most of the SMEs today, they are just operating at a very low margin because they don't have the right funding, but they are passionate about what they do. So they will go and get funding maybe at even 5% per month just to bootstrap and keep going. So imagine somebody getting funding at 5% or 4% per month, now able to get money at like, let's say 20% per year. You know what you can do with that. And it has a multiplier effect. So the company, maybe they are able to produce maybe 10 tons a year because of the cost. Because there are two things. The cost of fund is really high for them, and there's no availability of that fund at all. So even if they're able to get it, they get it at higher cost. So we are bridging the two. We are making fund available for them, and we are making it available for them at a reduced rate compared to what they are currently doing. So with that, it will grow the economy very well. So, and once one company is growing, the other is growing, you start bringing up what the economy is supposed to be, instead of us just all dependent on import. We'll be able to produce whatever we can.